Welcome to Financial Freedom FX, your go-to place for clear, powerful trading insights. Today, we're diving into the ETH USDT futures chart, where Ethereum is showing strong bullish momentum and pressing against a key resistance level. Let's break down the price action, indicators, and order flow to see where the next big move could be. Start with the big picture. This is the Binance Futures interface for the ETH USDT perpetual contract, and the chart is set to the 4-hour time frame. Each candle equals 4 hours of trading. Price is printing around 4,061 USDT with a 24-hour gain of roughly plus 3.55%, placing us right under a visible horizontal level at 4,070 that's acting as intraday resistance. The recent structure shows a classic bullish sequence of higher highs and higher lows from the swing base near 3,353, followed by a momentum leg that pressed straight into this 4,070 ceiling. That dotted horizontal line is crucial. If price can close a 4-hour candle above it and ideally retest it from above, it flips from resistance to support and often unlocks continuation. Look closely at the three moving averages layered on the chart. The short-term MA7 in yellow is above the medium MA25 in pink, and both are trending above the long-term MA99 in purple. That bullish stack tells you momentum MA7, trend MA25, baseline MA99. In practical terms, the MA7 near 3,095 is your first dynamic support on shallow pullbacks. The MA25 near 3,184 is the mid-trend cushion for deeper dips, and the MA99 near 3,712 represents the line in the sand for the overall 4-hour uptrend. When these three slope upward and fan out like this, buyers are in control until price meaningfully closes below the MA25, and especially the MA99. At the top of the symbol header, three prices matter for risk: last price, 4,061, mark price, 4,059.93, and index price, 4,060.60. The last price is the most recent trade. The index is the averaged spot reference from multiple exchanges. The mark is the fair value estimate Binance uses for funding and liquidation. Liquidations trigger off the mark, not the last, so if you're using leverage, always watch the mark price panel. It prevents manipulation, but also means you can get liquidated even if the last price hasn't touched your line. The funding rate shown is about plus 0.01% with a countdown. Positive funding means longs are paying shorts, which usually happens when futures trade at a premium to spot. Slightly positive funding supports the idea that sentiment is bullish. But if funding keeps rising while price stalls under resistance, it can foreshadow a squeeze or a mean reversion dip. Glance right at the order book. Red levels above are asks, sellers, green below are bids, buyers. The best ask and best bid are almost touching, so the spread is a cent or two. Extremely tight, which signals strong liquidity. When the spread is tiny and the ladder fills quickly, breakouts can be cleaner because orders are getting matched efficiently. If you see stacked size just above 4,070, that's resting supply. If buyers chew through it and price holds above, that absorption is your breakout confirmation. If instead you see bids pulling and asks reloading, the market is telegraphing a rejection. On the right trading panel, you're in cross 20x with order type on limit. Cross margin means your entire futures wallet backs all open positions. Great for flexibility, dangerous for cascading risk. If you're learning or trading around news, consider isolated, so a single trade can't drain the whole wallet. With 20x leverage, a 5% adverse move is a 100% account move. So this is where proper sizing, a predefined stop, and TPSL toggled on are non-negotiable. Reduce only is a powerful safety. Check it when taking profits, so your take profit order never flips you from long to short by accident. Time in force is GTC, good till canceled, which is fine for planned entries. For momentum breakouts, a stop market or stop limit can be cleaner. Translating all of that into a plan, start with scenarios. For a bullish continuation, you want a 4-hour close above 4,070, then a small pullback that holds 4,070, 4,060 as support. That retest gives you a tight invalidation. If price loses the level on a closing basis, you're wrong quickly and can step out. Upside ladder targets are usually round psychological handles and prior minor distribution shelves. Think zones like 4,100, then 4,150, 4,200 if momentum persists. If you don't get the clean breakout, the next high probability long is a pullback that tags the rising MA7 or the prior breakout block just below 4,040, 4,020 and prints a strong bullish reaction candle. Your invalidation is the last 4-hour higher low. If that level fails and we close below the MA25, momentum cools and the market shifts into a deeper pullback phase toward the MA99. For a bearish tactical trade, patience is key because the higher time frame trend is still up. You'd want to see a clear rejection wick at 4,070, 4,090, followed by a lower high and then a breakdown through the most recent 4-hour swing low with follow-through. A short entry there aims for the MA7 first and the MA25 second. If the MA25 cracks on closing basis and flips to resistance, the door opens to a mean reversion leg toward the MA99. Always keep an eye on the mark price while managing stops. Rapid funding flips combined with a widening spread are often your early warning that momentum has changed. Position sizing and risk are what keep you in the game. On futures, think in terms of risk per trade, for example, 0.5% to 1% of account, rather than fixed contract size. Place the stop where your idea is invalidated by structure, not where it feels safe, and then compute size so that if the stop hits, your loss equals your chosen risk. If you're trading the breakout, your invalidation is the loss of the breakout level. If you're trading a pullback, your invalidation is the loss of the higher low. Use TPSL to automate execution and consider reduce-only profit targets that scale out in steps as price approaches round numbers or liquidity pockets. To wrap it up for the video, ETH is trending up on the 4-hour, momentum MAs are bullishly aligned, liquidity is deep, funding is mildly positive, and price is knocking on the 4,070 door. The next big clue is whether we close above 4,070 and hold it, unlocking continuation, or whether sellers defend it and force a rotation back into the moving averages. Trade the level, not the bias. Let the market show its hand, anchor your invalidation. On structure and size the position so one trade never defines your month.